Hello, and welcome to a Charts from Oliver Velez session. Today I'd like to talk to you about Alcoa Inc., symbol AA, a stock that has recently made me extraordinarily exciting about the possibilities going into 2010. If you've been following my work on Facebook over the past year or so, you are certainly very much aware of the fact that I have a deep love affair with the metals. I have been personally involved in gold for a very long time, since the mid to late 90s when gold was trading at 285. Not only did I begin purchasing gold in small amounts in the 285, 290 area, I added in the high 300 area. I added to my gold positions in the $600 range, in the 750 range, and went public on Facebook in a very big way to pound the table on huge accumulation of gold at 935. As we all know, I believe gold experienced an exponential rise well above $1,200, at which point we took profits off the table expecting to experience a pullback, which we are experiencing in most of the metals, certainly gold and silver. This pullback, in my opinion, is very well deserved, and I'm personally waiting for the pullback to settle itself to begin a brand new phase of accumulation of both silver and gold. I'm also very bullish on all the metals, not just silver and gold, but aluminum and platinum and virtually all the commodities, in my opinion, in the year 2010 into 2012 and beyond are going to be really quite amazing opportunities for wealth accumulation, and I will certainly be looking to take advantage of every single one of those possibilities. But Alcoa has in recent weeks made me very excited because its move from mid-December to the current time period here has finally moved to not only a 52-week high, but it's broken above some key resistance levels. And what I'd like to do today is take you over a daily chart of Alcoa to teach you and show you how to spot and identify key signs of institutional buying and accumulation. You see, every astute chart reader must learn or gain the skill and the ability of being able to spot what I call the institutional elephants. You see, the institutional players want to be anonymous. They do not want the world to know their moves until they have accumulated their entire line or their entire positions. They're like elephants standing outside of a bathtub, hoping to step into the bath water without raising the level of water too much or too high for fear of being detected. But we know that an elephant cannot step into a bathtub of water without dramatically affecting the level of the water in the bathtub. So the astute chart reader is akin to a person watching the level of the water. And if an elephant steps into the tub, the level of the water rises. And if the elephant steps out of the tub, the level of the water in the bathtub dramatically drops. So let me go over key signs of the water level rising. You are looking, as I'm speaking, at a daily chart of Alcoa with two key moving averages superimposed on the chart. The 8-period simple moving average and the 20-period simple moving average. Now, if you've followed my work for any part of the last 16 years, you know that I do not consider a chart unless it has several key moving averages on them. These are two of the key moving averages that I must have on the chart. They're indispensable in my view. We're looking at a time period on this daily chart that spans approximately 2 months and a quarter or so. Now, I'd like to draw your attention to the left-hand side of the chart. I want you to note that when the stock was trading in the latter part of October around $14.50, Alcoa experienced a 4-day severe drop to the downside. But I want to draw your special attention to this bar. Okay, now what I'm going to do is I'm going to clear that bar out so that you can see the bar inside the circle. That bar is what I call a huge, elongated, wide range, bearish elephant bar. Notice the length of the bar. It's sizable. Notice how wide range from high to low it is. Notice that the vast majority of the bar is entirely colored, meaning that there are little to no tails on the opposite ends of this bar. This is the most bearish bar the bulls can produce. A fat, long, elongated, wide range, elephant-like red bearish bar. You cannot have a more bearish bar than the bar that I've just circled. Now, one of the key tips I'd like to share with you today is that is it important for every single chart reader to look at a chart and to first identify what's the most bearish bar on the entire chart I'm looking at? Well, I've just circled it for you. The most bearish bar the bears produced, the best they had, was produced on the 28th of October, and I have that bar singled out. But what happened the very next bar? The very next day, the bulls came off the rope so powerfully that they completely negated the best that the bears had to offer. And how did they negate that? By taking out the high of the most bearish bar on the entire chart. So here is tip number one. Whenever the most bearish bar on your chart has been completely taken out by a green bar, and what is my definition of taking it out? Trading above the high and closing above the high of the most bearish bar on the chart. Whenever that happens, you must now look to the bulls as having control. The bears had it. As long as the high of the most bearish bar on your chart is still intact and has not been closed above, the bears are still in control of the activity. But this bar has dramatically reversed that control. So the assumption now must be that the bulls have regained control again. Now take a look at the next green bar. You see that? That is also a very sizable, wide range, bullish elephant bar. Beautiful. Now, what happened after the second showing of strength by the bulls? The stock drifts higher here, and then starts drifting lower, and voila. The next major bar of import is another green bar, another sizable, wide range, solid elephant bull bar. And after that, what's the next real sizable, solid bar? Another bull bar. Now notice these bars have little to no tail. That's one of the key signs of a true elephant bar. Now, if charts are the footprints of money, whose footprints are the biggest? Whose footprints are the deepest? Whose footprints are the heaviest? This clearly shows signs of quiet institutional buyers. The buyers are making the most solid bars on the chart. The pigeons, look at the pigeons bar. Pigeons can't make deep footprints. Look at the pigeon bars that I'm pointing to. But which group, the bears or the bulls, are producing the heaviest and the deepest footprints of all? And so you must not only identify the most bearish bar on the chart, but you must also determine which side, the bulls or bears, are producing more elephant bars than the other. And that's the way you go. Now, this bar produced the key breakout that I believe has started the run. This run, in my opinion, has a minimum upside potential of a double. I'm looking for Alcoa to be in the low 30s on the low side and perhaps as high as the mid 45s. Now this is over time. It's a wealth play. I'm looking for the stock to pull down into my circle area marked on the right hand side of the chart. I'd love for it to get down into the $14 to $14.50 range. I'd love it to get to the $13 range if possible, but I will start my accumulation at that particular point. And this is Oliver Velez coming to you with his next Velez Wealth opportunity. I hope you've enjoyed the show.